And the story of the week? Well, helicopter money has begun. Oil has had the best week ever, but we have a long way to go. Stocks sink in part because of rebalancing is declining. The lockdown is now seen in the labor and survey data big time. Despite the gains in energy stocks, the equity markets were sliced and diced this week, with small cap stocks having their fifth weekly loss of the last 6 weeks. However, over the past 2 weeks, the Dow is still up around 9%. One of the interesting things I'm watching closely is the VIX, or the fear factor. This week, the stock market decoupled from the VIX. In other words, the VIX was notably lower, while at the same time stocks continued to sink. Typically, they move in opposite. The correlation is not always perfect, but the difference was profound this week. I'm watching the VIX as it can often signal market weakness or strength, and the decoupling is puzzling, at least at this point. Before we get to the charts, I want to remind you to have your notification bell on in case I send out a video alert. I don't do it very often, but these days are different. So make sure to subscribe and set the notification. All right, let's take a look at the charts. Today we're going to look at two charts, the daily and the weekly. We'll begin here with the 6-month daily on the spiders, the SPY, and the close on Friday was 248.19. As you can see, we had a pretty decent bounce off of the bottom there. We came up here, we ran right into the 20 EMA. We came off of that a bit, and hopefully we're trying to set a bottom here. But I'm not sure if that's going to hold. We'll see. Moving on down here into the MAC, things look good with a bounce there at the bottom. The move on up with a fast line moving through the slow line. So we're now moving on the upside. However, when you go to the histogram, you can kind of see that it's losing steam. Perhaps the rebalancing that occurred toward the end of last month is tapering off. So we're going to have to watch that real closely to see if that starts to decline further into the price rate of change. Things look good. Nice bottom there. Again, it moved on up and it may be turning over, but we can't quite tell yet, at least not at this time. Moving down into the RSI, we're at a moderate 44.84, which is decent, showing decent strength here. So that's one good oscillator. Stochastics looks fine. Nice bottom with the move up in the fast line through the slow line up above that midline or 50 line, which is good, but a little bit of a hesitation here. So we're going to have to wait and see what happens next week. Here into the volume, this is exactly what we want to see. The volume spiked on up, but now it's tapering off with hopefully a more calm market. I don't know. Do you feel calm? Here into the Williams, there. Negative all the way through the end of February into March, but we bounced off, headed up into that overbought territory. We came out of that territory, but we're still above the midline or 50 line, so hopefully we can stay there without this coming down. Watch the Williams. If it heads down below that 50 line, then we may have a little bit of difficulties in front of us. Back up here to the price chart. One last look before we go to the weekly chart. And now into the 3-year weekly chart on the spiders. We see the bottom there at that point coming off of that high. Very fast, very furious, all the way down here with a very sharp bounce back. We did hit that resistance there at the 20 EMA on the daily chart. The 20 EMA on the weekly is way up here. So that resistance is coming from the daily chart. But we're looking here at the weekly. I think the weekly is going to be more important. And one of the more important oscillators here is the MAC. The difference between the fast line there and the slow line there means there could be some volatility and sideways trading here while this repairs. It could take some time. Now, one bright spot here is the fact that the histogram shows that maybe we're starting to bottom at that level there. I'd like to see what happens into next week, but right now it's starting to form a bottom. So we'll see. here into the price rate of change, the bottom, the move on up, a little bit of fish hook down at this point. I'd like to see it continue on up. But again, there's a lot of space between here and here, which means a lot can happen. Into the RSI, we're at a very weak 29.24, but it's trying to improve. It's moved out of that oversold territory, so hopefully it can continue on up to that midline or 50 line. Into the stochastics, same thing there. Volume looks fine. Again, I like to see the tapering off here in the coming weeks. Hopefully things calm down even more. Into the Williams, we did bounce out of that oversold territory, but not by much. I'd like to see this climb a little bit higher. But what I'm seeing in the weekly tells me that the probability is we're going to have some more volatility coming in the next few weeks. There are some decent signs that I see. It's just that it's not over yet, at least the difficulties and the negative nature of the markets. It's not over yet. Stay tuned. So for today, that's ChewDog Charts. Thank you.